Start recording now. Okay, so welcome everybody to this next session of training for the Booster businesses as part of the Big Up Small Business programme that we at the Travel Foundation are running in partnership with the TUI Care Foundation. And this is the Business Sense 101 sessions that we're running this week, so today and tomorrow. And I'm really pleased to welcome Anna Kay Wilson from Premium Consultancy Services. She's going to be running the session today and tomorrow. And today's is on how to structure your business, with tomorrow's session being on bookkeeping skills. And the plan is for it to be very interactive. I'll hand over to Anna Kay in a second. So any questions that you have will be really welcome and will help us to help with your any issues that you have in your businesses that you'd like to raise. Please do that now. It's a safe space to do that, and we're here to help. So yeah, Anna Kay, would you like to introduce yourself first, and then perhaps Coral will do a round of introductions of the businesses. Thank you.
Okay, sure. Good morning, everyone. As was told, my name is Anna Kay Wilson. I am the CEO and Principal Consultant of Premium Consultancy Services. We provide services to small business entities such as accounting, bookkeeping, business registration. We assist them in managing their business effectively. I am also full-time employed, and I am the financial accountant for one of Jamaica's top accounting, top manufacturing companies, And so I am doing a little bit of both. I'm also considered a self-employed person like yourself, and I'm also an employed individual. And so I'm happy for this opportunity whereby I can share this information with you so that you are able to effectively manage your business.
Great, thank you, Anna Kay. I'm going to just ask everyone to introduce themselves, starting with Nonsuch Falls.
Hi, I'm Tamika Barrett. I'm a local tour guide at Nonsuch Falls.
Okay.
Morning, everyone.
Good morning.
Good morning, Tamika.
Good
Thanks
morning,
for joining
Tamika.
us. And Marlene, you are on mute.
Yes, good morning, everyone.
Good morning.
I'm Marlene Stevens Daly. I'm representing Far Out Fish Hut this morning. And I'm looking forward to the session since mathematics and accounting and all these things are not my fault.
I'm sure Anna Kay is going to make sure that at the end of the session, they are your forte. So. Thanks, Marlene. I think we have Fiona Smith.
Good morning, everyone. I'm representing Culture Market Jamaica. We're a farm-to-table experience in Trelawney, in the Copic country, up in the mountains. And what I'm looking for today is any additional information that I don't already know about ways that small businesses can say save on taxes or save on something in operating in Jamaica, like those little quirks that we wouldn't normally know if we're not in accounting.
Perfect, thanks Fiona. And the next, Bianca.
Hello, good morning. Morning, everyone. Morning to our presenter. I'm Bianca Young, and I'm representing Animal Farm and Nature Reserve. We're a eco attraction and working farm in Hanover. So looking forward to the session. I'm also not very well versed in sort of business management, so I'm looking forward to learning today and also being able to support my team. My primary role is within social media and marketing. Thank you.
Perfect. Thanks, Bianca. I see we've been joined by someone else, Priscilla.
It's Anna Kay's colleague.
Okay.
Yeah.
Co-presenter. Okay. So it's Priscilla Spence Wisdom. Welcome, Priscilla. Well, I don't think we have anybody else. Are you seeing anyone else, Rebecca?
No, not in the waiting room. I'll keep an eye on it. And also just to say, I'll also keep an eye on the chat, as will Coral. So if there are any questions as we go along that you would prefer to put in the chat, feel free to do that, or any comments, and I will be keeping an eye on that too.
Perfect. Thank you all. I'm going to hand over to Anna-Kay now.
Okay, so today I will be presenting on how to structure your business. Now, when I look at the profile, I notice that most of the entities may have already been registered, but this information would be very useful to you, as you can always transition from one business structure to a next based on how well you believe a particular structure will better able to suit your business needs. So I'm going to share my screen now so that we can get into that. I believe you should be seeing my screen now.
We
Great.
can, thank you.
All right, so our learning outcome today is to know the various key business structures, and let me minimize this, please, and how to determine the structure that suits your need. You know, to know how to organize your business structures and to understand the basic requirement of managing same. You should also know, you will know the various tax requirements based on your chosen legal structure and how to maintain tax compliance. So in Jamaica, there are several legal structures that exist. The two popular ones are a company and a business. When we say a company, we are looking at commercial entities that are registered or incorporated under the Companies Act of Jamaica. Companies can either be a non-profit or a profit generating. And I'm sure most of the entities who are logged on today, we are all in the business of profit generating. And we have also sole trader businesses and partnership. Those are registered under the Business Name Act. Same with the Companies Office of Jamaica, but they are regulated by a different act, which is called the Business Names Act. So we have, as was mentioned, two types of business names. We have sole trader and partnership. We will be looking at sole trader in a minute, but business names are registered with the Companies Office of Jamaica, and they are placed on a public record by Companies Office of Jamaica for public disclosure. Anyone may search business name information contained on a public record for free to find owners or principals behind a business name. So your company, your business is currently would be registered with the Companies Office of Jamaica, and anyone can go to Companies Office of Jamaica or go to their website and search for your name, your business name that is, and they will know when you are registered. They will know your legal address, your registered address. And if they want more information, they can pay to get those information. But there are some basic information that are shown on Companies Office website that anyone can have access to. So this tool, it helps entities or individuals who are transacting business with you to verify that, yes, you are a legitimate entity. So who should register a business name? An individual or firm that is selling goods or services, or somebody who is trading outside of their God-given name. So my name is Anna-Kay Wilson. If I decide to have a business and I name the business Anna-Kay Wilson, I really do not need to register that name because I'm operating in my given name. However, if I have decided to operate a business and I want a unique name, now my business name is Premium Consultancy Services Limited. Now, there was a requirement for me to register my business, and I have gone through the necessary process in getting that done. I looked through the profile. I've seen a number of business names. Some of them I was able to search on Companies website, Companies Office of Jamaica website, and I noted that you are registered. So that is a good step. However, there are some persons who need not to register their business if they buy and sell stocks, livestock that is, if they occupy a public market stall and pay market fees, if they are established solely for social and welfare purposes. Now, as much as this says that they are not required to register a business name, if it is that they decide to operate under a given name. So yes, I buy and sell livestock, but what if I call it Mary Jane Livestock Association or something to that effect? Then now I'm operating under a name, a legal name, and in order for that to be recognized by the Companies Office of Jamaica, one would be required to register with them, and then they're able to use that name legally to transact business. However, if persons are just buying and selling their livestock, they can continue to do so in their name. So it goes back to what I had mentioned previously, that if you are operating in your given name, you need not to be registered. But if you seek to want that unique name that will stand out to your customers, then yes, you will be required to register your business name. So there are certain advantages and disadvantages of a sole trader. And as the name suggests, you are the only owner. So it means that you make all decisions. You are in control of everything. So you reap all the rewards. You know, the business, though, is easy to dissolve if you decide not to operate anymore. It's so easy to close the business. You know, sole traders do not have to disclose accounts to the Companies Office of Jamaica like other entities. However, there are some disadvantages to sole trader businesses, and those mean that you are taking on all the risk of the company. You bear all the risk, and all your personal assets are at risk for any debt. So it means if you register your business as a sole trader, should anything go wrong, should somebody decide to enter your business place and something happens to them, if they decide to go the legal route, they are not just suing the business, they're suing you, the individual. So there's not much security when you register as a sole trader. Also, sole traders may run the risk of bankruptcy. You know, funding, it may not be so easy to get funding for your business, as most financial institutions, they look for information that shows longevity. And as a sole trader, it means that if something goes wrong with you, chances are the business will not continue. And so the financial institution looks for longevity. They look for the fact that there are plans in place for growth, and there are succession plans in place in the event that the owner is no longer operating. So there are certain disadvantages, as was mentioned here, and those are critical to consider, especially when you are in an industry like the one that you're in now. Initially, it's good to register as a sole trader. It's very cost effective to be a sole trader. But when you are catering to individuals, especially those recreational centers where persons will come onto your premises and engage in various activities, and if anything goes wrong, we really do not want the business to go out of operation, as all legal affairs will be dealt with by the individual rather than the company. We have the partnership structure. Now, the partnership structure is somewhat like a sole trader, but now you have more than one person to help in managing the the business. So these are persons who work together to effectively manage the business. However, there should be a partnership agreement in place which outlines the conditions of the partnership, how many percentage of the share of profit should be shared among the partners, you know, those who will be taking active part in the partnership, those who will be the managing partners, the person who will really be in control of everything, while others, you know, they are called sleeping partners. They don't really actively take part in the business. They may put together their capital inputs into the partnership, but they do not have management control. And so the partnership agreement is critical because this outlines the relationship between all the partners. There are advantages and disadvantages, and as the name suggests, it's a partnership. So we share all the workload, and so it means that there are more time on hand to get things done. So this partner may have a situation to deal with, and so another partner can help in that process versus have been a sole trader, you are the everything in that business. You are the HR manager, you are the accountant, you are everything as a sole trader. But as a partnership, you have other entities working together to share the workload. And as well, you share the risk and responsibilities. In the event of a legal situation, though, for partnership, each individual is the liability or the risk is shared among all the partners based on the information that would have been outlined in the partnership agreement. So, for example, if a particular partner has 50% share in this partnership, one may have 25%, another may have 25%, that equals 100%. In the case of a legal matter and there are payments to be made out, then those payments would be borne based on the share of profit. If it is that the partnership itself, the business itself, does not have adequate funds, then it then filters down to the partners. And one would be required to pay 50%, the other 25% and 25%. So they share all the losses of the entity. They share in profits. So everything is shared among them based on the partnership agreement. There are disadvantages to that. You know, normally when there are a number of persons together and decision making may take longer because one may want to decide on a particular matter. One may feel strongly about a particular matter and another one may say, no, let's wait. So it may take a longer time to decide on the way forward in comparison to a sole trader who makes decisions and get moving right away. Partnerships or the partners are jointly and individually liable, as was mentioned before. The partnership may have a limited life. Just as the sole trader, if he dies, then the business dies with him. As a partnership, it depends on the number of partners that are in the partnership and what was agreed on in the partnership agreement. So in the partnership agreement, you may say if someone dies, then this partnership ends altogether. Or it may say if someone dies, then the other partners may be able to take on their share of the partnership. So they may be purchase the share that that other partner may have so that it knows. So if it was 3 partners before and one died, then it becomes 2 partners, and it is now based on how much shares were purchased by each individual partner from the deceased partner. Now the deceased partner cannot sell their shares, so they would have put things in place so that somebody can manage their estate for them and is able to transact that business on their behalf. But it's most times you'll find that partnerships will dissolve and they decide to reform as something else or as a different type of legal structure once someone dies. So in light of your customers having transacting business with you for many years as a partnership, then one of the partner die, it begs to say that the business may not continue, and so the customer may not feel safe in transacting business with this entity or continue to transact business with this entity. And if the other partners decide to dissolve altogether and reform another entity, it has a lot to do now with marketing and trying to ensure that you communicate to your customers what is really happening and how you plan to continue with the entity going forward. Do we have any questions?
Thank
Yeah,
you.
there's a question.
Go on,
Sorry.
Coral, go ahead.
There's a question in the chat from Marlene. She's asking, what are the percentage of the share of the I think she means deceased, Doesn't
Right.
this go to his or her estate?
Yes, it can. It can. Yes, it does go to their estate. And so it depends on if something was set up from before. It all boils down to the partnership agreement as to what was agreed on. If it is that someone dies from the partnership, would we dissolve, or that partner is able to put it to an estate? So that has to be decided on from the onset, which is always good to have a legal person involved in that process so that they are better able to guide you in formulating that partnership agreement. But yes, it can go to their estate, but that would have to be agreed on from the onset.
What about if, what does the law say if there is silence in respect of that partnership agreement? If it doesn't speak to, let's say there are three of us, right? And I pass, and the partnership agreement does not speak to what will happen in the event that one person dies. What's the default?
The default from my memory, it is dissolved.
The partnership is dissolved.
Is dissolved, yes. But I can also get further information on that, but based on my memory, yes, it is dissolved, and the person's share in that entity, it goes over to their estate, and then they will decide how that is shared among their beneficiaries.
I think Fiona has her hand up.
Yes, I actually had that question, but now I have another question. Let us say that it is automatically dissolved. How does that mechanism work? Because when you registered it as a partnership, it would still remain as a partnership in your legal documents. Is it that it's an automatic thing that's done? Let's say one partner dies, do you like submit a death certificate to the company's office? I mean, what's the actual mechanism for the dissolution of that partnership? Is it just an automatic thing under the law, or do you have to actually take steps to make that happen?
You'll have to take steps to make that happen, because Companies Office of Jamaica would not know that this individual died. So you would have to complete the relevant form to update the records of Companies Office of Jamaica. And for partnership, once you're making any adjustment to the partnership, the previous application that was made, you will have to outline, okay, is this person now deceased? Why you are changing the previous structure? So if it is that you had 3 persons, 1 died, you have to file that form with Companies Office of Jamaica outlining the reason for changing of this individual from the partnership. And you will have to put deceased, you'll have to put supporting document to say that person died, which is the death certificate, before the structure can change. However, seeing that it was 3 for argument's sake, then it still remain a partnership with 2 persons. But if it was 2 persons and 1 died, then it now becomes a sole trader. But it's not automatically a sole trader until it is notified. You will notify the Companies Office of Jamaica. So persons may still continue to operate as a partnership because one, they have not updated the records at Companies Office of Jamaica. Nobody knows that the partner died. So Companies Office of Jamaica would not know that you are not operating legally as a partnership because 1 person is not a partnership, so to speak. Or if it was even 3 persons, 3 or more, 2 or more persons, then if 1 person died, yes, it's technically still a partnership because there are 2 other persons who are remaining. However, the structure changed. Sorry, not the structure, the number of partners changed. And so that needs to be notified with Companies Office of Jamaica. Once there are any changes in the original registration of the entity, it must be updated with Companies Office of Jamaica. And once there is a late update, then there are going to be late charges.
Okay, so this is probably not your portfolio because it probably goes more into the legal thing.
Legal, right.
Right. So I was just wondering if you would know, if you'd happen to know, if somebody does not update it? What if it's not updated and they get a lawsuit or something goes wrong? Do they end up having more legal trouble because they didn't update it? Or, I mean, does that have to do with anything?
Okay, so if they get into a legal struggle, based on my understanding, I would presume that they would have two things to deal with. One, they would now have to decide how would the legal affairs be shared among the remaining partners, because the agreement had 3 partners, for example. Now it's 2, and now we are now faced with this legal matter to pay out. And if it was supposed to be shared equally, then who is going to bear that other side, that remaining portion? And so it now leaves you to try to decipher how to handle this matter at the back end, when if it was done once the person died, then you would have now know who will bear which cost. But this is really a legal matter. And so the lawyer would be able to guide you as to the way forward as to how to handle this. I'm just responding based on my understanding of the matter.
All right, thank you.
Yes. Do we have any more questions in relation to this? Okay. All right, so limited companies, and we have private or public companies. And as the word suggests, private, you are not listed on the Jamaica Stock Exchange. Public entities, those are listed on the Jamaica Stock Exchange. And so you are now more screwed. You have more legal requirements, more regulations to deal with than a private entity who is operating in its own rights. We have 2 main types of registered companies. We have limited by shares, and you will see the other one, limited by guarantee. So limited by shares, members can only lose amount agreed to contribute for shares, which is limited. You must have limited after its name, and these are commonly used for profit-making ventures. And we have limited by guarantee. Members agree per the article of incorporation to contribute a fixed amount on unwinding up, and this amount is specified in the articles. Usually non-profit making entities are registered as a limited by guarantee, and limit companies limited by guarantee without share capital do not have share capital or shareholders. They have, trustees, or trustees they call them. A company is a legal body in its own right with an existence that is separate in law from its owner. The company can sue in its own name, and they are governed by the Companies Act of Jamaica. There are certain advantages and disadvantages of a limited company. Limited liability, only liable for the amount outstanding on shares or guarantee. So that's an advantage, as based on the examples that were given before, if there's any legal matter, then the directors or shareholders are only liable to what they put up in that company. Only the shares that they invest in that company, they're only liable to that amount. So there's perpetual succession. If the member dies, the company can keep going on. In registering a company, you have to outline a number of directors. You may have 1 director, 2 directors, any amount of directors you may choose to have. And so if one dies, it's just a matter of updating Companies Office of Jamaica to take off that director. And also you may choose to add another director. But it proves that there is a succession in the company because there are other directors in that company. And it may be easier to expand. Company may sue and be sued in its own name. Ownerships can be easily transferred, and ownership of property, company owns its property. For sole traders, any properties that are purchased is purchased in the individual's name. For partnership, yes, they do own assets in the partnership name. And so that's an advantage to having a partnership as well. They can purchase items in the partnership's name. So partnership and companies, they can do that. Sole trader is just in the individual's name. The disadvantage to having a limited company though is that there are government regulations to follow, and then it depends on the type of companies that you have. You may have more to follow than others. You are under more scrutiny when you are a limited company. There are certain administration burden, and you have to disclose accounts to Companies Office of Jamaica. Now, for limited companies, any changes that are being made in the company, if you have changed a company secretary, if you have changed your registered address, if you have changed anything in the company, the directors, the share of profit, not share of profit, the shares that is by each directors or shareholders, that must be updated with Companies Office. There are annual filing requirements for companies. And so you find that a lot of persons, when they want to go into business or decided to go into business, they choose the sole trader route because there's not much of a requirement of filing obligations with the Companies Office of Jamaica. There are other filing obligations with other entities, but for Companies Office of Jamaica, there's no filing requirement for a sole trader. If there are any changes for a sole trader, then it's basically a re-registration. Same thing for partnership. And for limited companies, all changes must be disclosed to Companies Office of Jamaica. So organizing your business structure, we are moving into that section. But before we go, do we have any questions in relation to what was presented?
I have a question, Anaki, and it relates to the filing to the Companies Office of Jamaica.
Yes.
You indicated that as a sole trader, you're not obligated to file. Is it that you're not obligated to file returns or income and revenue to the Companies Office of Jamaica?
So Companies Office of Jamaica, they do not accept tax filing. So the returns that are due with the Companies Office of Jamaica is just in relation to your records that was previously submitted to them. If there are any changes, you're required to file those. So the filing obligation for sole traders with the Companies Office of Jamaica is none. There's no filing obligations to the Companies Office of Jamaica. There are other filing requirements with other entities that I'll be sharing later. But with the Companies Office of Jamaica, there's no filing requirements.
Okay. But maybe for tax administration. Okay.
Right. If there are any changes though, for sole trader, if there's a change in your name and address, it's pretty much a re-registration you're doing. It won't update what you have. They will close the current one and re-register another one. For company limited though, if there are any changes, it's not a matter of closing, it's just a matter of updating the records, and they'll reissue the relevant documentation to the company. So organizing your business structure. So we must determine which business structure is best for you, whether it be sole trader, partnership, and limited. And once you have decided on which structure, yes, Marlene?
Could you put your cameras on? It just makes it a lot easier to follow.
Okay, sure, no problem.
Thank you.
All righty. So once you have decided on your business structure, if it's sole trader, partnership, or limited company, then you now need to take the necessary step to register the entity or transition from one business structure to the next. In transitioning from one business structure to the next, it's pretty much the same step in registering from the beginning, from the onset. So if you're a sole trader and a partnership, it is much easier to set up. You know, there is a name reservation that must be submitted to the Companies Office of Jamaica. And that name reservation is pretty much allowing Companies Office of Jamaica to search their database to see if there's another entity with a name that is similar to yours. or that has this exact name as yours. If they find an entity with the same name or a similar name, they will notify you, and you will not be able to use that name that you have decided on. You will now have to decide on a new name altogether. And what I find, especially in this new era where everybody is going into business, they just decide on a business name, create a social media account, and that's it. You know, it's after the fact they now decide to go and register their entity. And when they find now ready to register their entity, the name is already taken or the name is close to another name. Now, if your name is close to another name, you will have to decide on another name, submit it to Companies Office of Jamaica, and they'll do another search. And once they have agreed and have confirmed that no other entity has a name such as yours or similar to yours, then they will tell you the name is approved for registration. So once that process is done, you are now able to complete the actual registration. And you'll complete that by inputting the individual, the owner's name. So if it's a sole trader and a partnership, so the individual will put their name, their place of address, and their occupation, and a telephone number, email address. Usually they will want to verify your address. And so they will take either a driver's license, which would have the address on it. If that is your current place of address, then they'll use that. They will use your passport or your utility bill. For some reason, some entities, some individuals, they do not have these documentation readily available. And so there's a form that is called voluntary declaration, and that can be completed and signed by a justice of the peace. And it's pretty much to verify that this is your current place of address. And that is used to register the business name or the partnership. In the application though, you will have a registered business address and your business address. Your registered business address can be different from your business address. The registered business address is pretty much the location where all the records of the business will be kept. And so that is the address that Companies Office of Jamaica will verify. So that is what they need, the passport or driver's license or utility bill or the statutory declaration to verify, because they want to know that when they're ready to find you or somebody wants to find this business or to get information, then they know where to find them. The business address can be the same as the registered address, but it doesn't have to be. So each sole trader or the partners, they must have a taxpayer registration number, the TRN. I know that is obtained from the Tax Administration Jamaica. So they all must have a TRN in registering the business, which is the individual TRN now. When the entity is registered, then the entity will have its own TRN. You know, they will need an original valid government issued ID for each owner. And based on the type of business that you're going into, you may need a professional certification. So if you are opening a doctor's office for argument's sake, then you may need your medical certificate. Work permit, if there are persons who are from overseas coming into Jamaica to set up their business, then there will be need for a work permit. You will find that entities in the tourism industry, they need not to provide documentation at this point to say that they are a resort or a recreational entity. They're not required to do that on registration. However, it's a requirement to operate in the tourism industry. So register with TPDPO. The cost for sole trader and partnership is $2,500. And the turnaround time is typically 2 days. There are times when it takes a longer, turnaround time based on, the volume of work that companies office have, but they usually provide this to you in 2 days. And these can be done in office or online. And so you can decide which option is workable for you. Upon registration, you will get a business name certificate. This is valid for 3 years. And after the 3 years, you can re-register as the same business structure, or you can close that entity and re-register as a different entity. So if you were a sole trader before and you know after the 3 years, or you can even do it before the 3-year ends, you can decide to re-register as a partnership or as a limited company. However, if the 3 years passed and you have not updated the records or re-registered with the Companies Office of Jamaica, then there are late charges of $1,000. Limited company. Now for limited company, there is a name search and reservation. It's more, well, for the sole trader and partnership, when we are doing the registration, they pretty much give you a response immediately in relation to the name search and reservation. Immediately or sometimes 24 to 48 hours. For limited company, the name search and reservation, Companies Office will do a much detailed search, and you are able to reserve the name for 90 days. So you may thinking of going into business soon, but you have not set up the business or purchase anything or start to operate in its entirety as yet, but you know you have a business name, you can register 90 days before you actually start doing your work and everything. And during that 90 days, you are able to sign contractual agreements in the business name. Once the name was approved by Companies Office of Jamaica, you are able to transact business in that name, sign contracts in that name, because the name is reserved at Companies Office of Jamaica. It is now, you are now legally, you can operate legally in using that business name. Once they have agreed on that name, you can move forward in doing the company's application. The company's application, right, the limited liability, the advantage of the name reservation is that it establishes the name is not already being used on the register and that it can be used. It protects the name from use by others, and it allows the company to use the name for pre-incorporation contracts with certainty, as I was mentioning before. So after the name is reserved, there are some documents that must be submitted to the Companies Office of Jamaica, and these are the articles of incorporation and the business registration form. When you're registering a limited company, there must be at least one director and a company secretary. If you have 2 directors, then you are able to use one of those directors as a company secretary. So one director can be both a director and a company secretary. But there are just 2 entities that are 2 individuals that are usually required for registering a limited company, a director and a company secretary. And the information pretty much that is required from these are just a valid identification from each of these individuals. They each have formed the articles of incorporation. It outlines the shares that are issued in the company, and some persons start from 1,000 shares, and as time goes by, you can increase that amount. It can be unlimited too. So it depends on what you want to start with, but there is no hard and fast way of deciding how many shares. You can just put 1,000 for now, and then you can increase as the time goes by. It also outlines who the directors are in the company. It outlines how they transact business. Can the company take a loan? Can the company, what happens in winding up and such like. The articles of incorporation outlines that. In registering a limited company, it's good to also have discussion with a lawyer or somebody who is familiar with the process, a company secretary, a chartered company secretary, that individual can also aid in assisting you in making the right decisions from the onset in registering.
I'm sorry, Anna Kay, I think your volume, your audio is gone.
Oh, I'm gone.
Okay, that's
You're
better.
hearing me now?
Yes.
Okay, great. I'm not sure what happened, but let me just go over. I was just mentioning that it's good to have a legal person to kind of guide you through the process, or a chartered secretary. That person they go through various trainings and are equipped with information to guide you in completing the process from the onset, so that you don't have a lot of changes in the future. But changes are inevitable, but there are some things that can be done from the onset to avoid making other changes as you go along in the business. The cost is $24,500, and so you find that persons really don't gravitate towards this at the onset. However, if you know the type of entity that you want to have, if you're looking to have a long-term business, a business that you will eventually want to be listed on the Jamaica Stock Exchange, it's always good to just start out right as a limited company. As a sole trader, yes, you can always transition to a limited company. And especially if the funds are not available at the time, it's just $2,500 for a sole trader. But if you have the resources in place, it is recommended, to register as a limited entity, so that you can start the process in getting to where you want to be eventually. So we have sole trader partnership limited companies. There are pretty much, you have to manage all entities, and it's not one size fits all. But there are certain things that we must take into consideration, and so we will be looking at those now. But all entities, it requires proper management, keeping records, putting the relevant documentations in place. But at the end of the day, one size doesn't fit all. So you must know your business, what it entails, what is required of you, and then you make the necessary plans and put plans in place to manage that entity. So the first step I'm recommending is to plan for success. And the great Benjamin Franklin said, if you fail to plan, you are pretty much planning to fail. But it's never too late to start planning though. And so developing a business plan is critical. This is usually required before you start a business. But if you start a business without a business plan, you can always start. The best thing is to just start. And so a business plan pretty much outlines specific objectives, strategies, sales and marketing goals, and also to determine how much cash you need to do the various ventures that you may want to do. And it's best to write it down. A lot of persons they think in their head. It's always good to think, but ensure you put pen to paper and to write it down. It provides more clarity when you make notations, and it provides guidance. You're able to see where you are and where you want to be. And so a business plan is critical. Usually you can work with somebody to guide you through the process, or there are a number of templates that are available that you can go through that process and guide. I will also be sharing that with you. I'll share it with Coral, and they will share it with you. A template of a business plan. If you have not done one, it's good to have one. Usually when businesses seek funding from financial institutions, they usually ask for a business plan, because they want to see that you have clearly thought about this business and you know where you want to be, and the business plan pretty much shows you where it is that you want to be, and the number of things that you are taking into consideration to get to that point. They also usually ask for a cash flow statement, which is also included in the business plan. The cash flow statement or cash flow projection, it tells you year on year how much you expect to earn, or the income you expect to flow into the business, and the expenses that are possibly going to flow out of the business. And that will determine, okay, these are your cash items now, cash flow statement, cash items, the ones that are likely to happen. And so it determines, okay, in a particular year, we are expecting this income, we're expecting this expense, and this net profit is there. The bank will look at that to say, okay, this entity is projecting that they're going to make a loss in first year. But then they recognize that as the years go by, that company would have implemented certain things, and they will see that the profit is moving. So you are now transitioning from a loss to a profit. And the cash flow statement shows that picture to the bank or to any other entity that you may be seeking finances from. It shows the projection of where the company will be in 5 years' time. Usually they ask for a 5-year plan. And so it will show all of that information in there. In preparing your cash flow statement, though, you now need to understand the entity that you are in, because in the tourism industry, there are certain seasons when business are booming, and then you have the down seasons, and that those factors need to be considered in the cash flow statement. So if you're doing a cash flow statement and all year round your sales are the same, then that's not realistic, because we know that there are certain high season and low season. And so the sales revenue must be showing that movement. Likewise, your expenses. If you know that you are accommodating more customers at a particular season, it's automatic that your expenses are going to go up unless you find cheaper suppliers, but sometimes cheap is not always good. And well, most times you will find that. But your cash flow should give a realistic picture of what you expect your business to earn. And the truth is, it is not cast in stone. You can always go back and make the necessary adjustments as you see fit. So the business plan outlines all of that. If you have not done one, I'm recommending that you start the process of getting one done so that you can have that holistic view of your business. The second thing that I'm recommending is to build a team. John Maxwell said the truth is that teamwork is at the heart of great achievement. We must know our strengths and weaknesses. We must know what we can do and cannot do. As sole trader, we tend to do everything ourselves. But not because you're a sole trader, it doesn't mean that you can't contract persons to do certain things for you. When you do that, it allows you time to focus on the business itself instead of doing the regular Monday tasks, right? But how do you build a winning team? Because you need a team that will support your vision, one that will know where you want to be and how to get there. And so you will try to hire the right talents. Now, you may know what you want, you know who are the type of persons that you want to hire into your entity. And hire here doesn't necessarily mean employees. It means contractors. It means that you find mentors. It means that you find somebody that can guide you through the process. It's a team. Team doesn't mean employee. It doesn't mean persons who you work with to achieve a goal. So you empower your team to make decisions. Now, making decisions, it depends on who you have on your team. So you may not necessarily give a contractor the power to make certain decisions for your business, but you will arm them with enough information or enough data to provide you with meaningful information so that you can make that decision for your business as a sole trader. As a limited company, you would have employed persons, your managers, who are able to make decisions for the company that is in line with the goals and aim and the vision of the company. And you invest in people and your processes. People, your employees, your contractors, you invest in them, provide the relevant training, provide the relevant support so that they are able to do the task well. And at the end of the day, it is coming back to achieving your vision that you have in your company or for your company. Maintaining proper records, and this is a critical situation. I find in having discussions with certain with small business entities, record keeping is not the main thing on their agenda. They go and purchase something and they forgot to keep the receipts because they believe, oh, I swiped my card, so it is going to show on a bank statement. Yes, it's on a bank statement, but the physical receipt is critical, especially for tax purposes. In Jamaica, the Jamaica tax system is a self-assessment system. So the government relies on you, the individual, to declare what you earn and to declare the expenses that you incur. Now, they are able, once you have filed a return, it is within the law for them to inspect your records. They have within 6 years to inspect those records. Now, if you declare that you have incurred certain expenses, they are going to ask you for proof of expense. Bank statement is not a proof of expense. Yes, it shows that you incurred this expense, but the real proof is the receipt that you would have received from your supplier. And so it's critical to request one from them, and it should also be in the entity's name. If it's a limited company or a partnership, it should be in the entity's name. If it's a sole trader, then there's no other name but the owner's name it should be in. But those information critical. Physical documentation is important. Yes, we're in the age of data and electronic means and digitizing stuff. Yes, get the physical, scan it, save it in the cloud, but there must be proof of expense. Maintaining proper records, not just for accounting purposes, but for your staff, for anyone working with you. And as the slide said, create written records of everything. And this will benefit you in the long run. And these are standard operating procedures. And these are steps that provide instructions to help persons to carry out routine operations, especially for sole traders. I mean, for limited companies, it's critical. A partnership is critical. It's best to document certain processes so that if somebody comes in to work with you, they know exactly what is to be done, how it is to be done, who to go to. You don't want to spend time in somebody always coming to you asking you certain questions that are everyday functions. Have procedures in place, right? Yes, it takes time to get these things done, Initially, it takes time. It takes a lot of your time, but in the long run, it will benefit you, save time in the long run, because now persons are able to get the work done in a shorter time, more effectively than if they were to be asking questions repeatedly. For sole traders, everything is in their head. They know how to do this, they know how to do that. But what if they need to ask somebody to come and assist them along the way? The person can't always be reaching out to them and say, how do you do this? How do you do that? Spend some time, document the steps. Start with the smallest step to the largest one. How do you process a transaction? How do you process a sale in your business? What is the first point of contact the customer make? Do they call you? Do they send you an email? Okay, what next after the email is sent? Do I send them a confirmation email to say that I am in receipt of your order and provide instruction on how to make payment? Well, depending on the structure that you may have, the person may go online. If you have a website, go online. So look at the services that you offer. They select that, okay, they want to visit your property on a particular date. When they submit that request, that reservation, what happens next? So your staff need to know, okay, once a customer submit a reservation, if an automated email is not sent to them, it simply means that somebody needs to now reach out to that person, right? So that needs to be in the SOP. Okay, the customer service rep needs to reach out to the client to say, we are in receipt of your request. This is the next step. You make payments and so forth. So you know your business best. So it's good to document it. If you do not have the time, you can work with somebody to get it done for you. You just have dump your knowledge to them and they'll formulate it and will share the document you'll read over, and then the necessary changes can be made. But it's critical though to have standard operating procedures. And if you have employees in place, there must be if it is that they go against these standard operating procedures, there must be ramification. There must be a way in which that you can measure if the employee is adhering to these, and if they are not, put certain things in place to ensure that it is adhered to. Proper records as it relates to maintaining proper records for transaction purposes. Now, the only way you can know if your company is making a profit or a loss is if you keep proper accounting records. And what does this mean? Okay, we have persons who keep their receipts in a box or in a bag or in a file folder. It's good. You're keeping the physical documentation, but what next? Can this provide you with enough information to make decisions for your company? No. All you're looking at is data. You can input that information into an accounting system. Some persons use Excel. Excel is good, but it doesn't, you now have to spend the time to create formulas to determine what you want. The accounting system is developed in such a way that you input the data and you are able to generate certain reports from that system. So yes, keeping proper records, the next step is to transform that record, that data, into meaningful information. So utilizing an accounting system that can help you to keep a track of your sales, keep a track of your expenses, and at the end of the day, you can generate reports that can provide meaningful information. We have a number of accounting systems on the market, our cloud-based accounting system, and it depending on your costing needs, your cost, that is the amount that you're willing to pay for it, and also the type of business that you have, if it suits your business. We have QuickBooks, we have Xero, we have SAP, we have so many, and so it just depends on your needs. But the one that is more user-friendly that I find is QuickBooks and Xero. Both of them are user-friendly and small businesses utilize these. There's a free one that is available, but they are transitioning from international markets, and they classify Jamaica as an international market, and that accounting system I'm referring to is Wave. A lot of small businesses are using Wave accounting. It's an online cloud-based accounting system, but they are transitioning from offering the service to everyone. They are closing down to international market and only offering it to the US and Canada. So if we are using that system, I'm suggesting that you think to move away sooner rather than later, because they are looking to close down that. But we are able to use other accounting systems like QuickBooks and Xero. So you put the information in, generate a report. Okay, so you're at the stage of a report. How do you interpret this information? Well, some information is pretty much, because you know, if you have income, expense, if your income is greater than your expense, then you make a profit. If your expense is greater than your income, then you have made a loss. But that's just one thing. That's just looking at the big picture, right? That's profit or loss. But you can go down into the books to analyze the data, analyze the information to say, okay, what is causing us to be making a loss? So that now is where you will try to have someone on board to assist you in that process, to inspect your records and to go through to see, where am I spending the most? How can I reduce this cost? How can I put things in place to ensure that I am not incurring so much expense in this area. You know, so you'll have to put things to manage your expenses. For sales, it's just a matter of okay, marketing and having brand loyalty, customer loyalty. And I believe that you may have had a session in that previously. But advertising is critical, and that can be done in this day and age, social media, websites, and your own personal website and Google. But at the onset, keeping a record is critical because it filters into everything else in your business. So we're at the stage of knowing your tax obligation. But before I go there, do we have any questions? Okay, so know your taxes and obligations. As I had mentioned before, we are in a self-assessment system in Jamaica, but the government, they decide on the various taxes that are applicable, and based on your given business structure, you may find that you have more to pay or less to pay, depending on the route that you take. And so based on that, you now have to ensure that you meet these requirements, because there are implications for not meeting them. There are interest and penalties to be paid if it is that you have not meet these requirements. As a sole trader, the net profit is taxed on the owner. That is one of the drawbacks to being a sole trader. If the company makes profits, good, but the company, I'm using that term loosely, is really a business for a sole trader. You're operating a business. So if the business makes a profit, that profit is taxed on the owner, individual. So when your accounting records are put together with the income and your expenses, if you make a net profit, that is taxed on the individual. However, there's a tax-free threshold that can reduce that tax that you pay at the end of the day, and that the current tax-free threshold is $1.5 million, $96. And so you will less that from your net profit, all right? And the tax rate, I'll go into that eventually, and then you times that by the tax rate. However, for sole traders, as an individual, you are, whatever the company makes is you. That money, in the eyes of the taxman, that money belongs to you. It may not be in your bank account, in your personal bank account, but it is taxed on you, the individual. And so after the business accounts are set up at the end of the year, which the tax year is January 1 to December 31st. Some companies have different financial period, which spans from different months, but at the end of the day, should come back to a 12-month period. But for sole trader, their tax period is set January 1, December 31st. Right? And so whatever income and expenses that are earned in that particular year, that should be included on your tax return. We are now in the year 2022. The return for the year 2022 is due the following year, March 15. So that would be March 15, 2023. Right? So in preparing your tax return, as a sole trader, what I usually recommend to my sole traders are that, one, if you're not contributing to a pension plan, I recommend that you do so. When you contribute to a pension plan, it reduces the amount of income tax that you pay, because the tax is calculated after you contribute to the pension plan. It's an allowable deduction. So An individual has a maximum of 20% of their income to contribute to a pension scheme, an approved pension plan. When they contribute to that pension plan, no tax is calculated on that. It is done before the tax is calculated. And so it then reduces the amount of tax that you have to pay or should pay at the end of the year. And so individuals, sole traders should establish, go to an approved pension scheme, set up an account, determine what their income is for that year, and calculate 20% of that. And that will reduce your net profit. Now, one would say, okay, why? Why? Because at the end of the day, the tax goes over to the government. But when you do a pension plan though, the pension plan, you get the money at the back end. When you're retired, the tax is pretty much delayed. When you reach that point, that's when the tax will be taken on. But you would have saved tax now. You're trying to save tax now. And by later on, it will be taken out when you decide to take the funds from the pension plan. But you are trying to save costs now. Paying the pension plan now, it reduces your income tax. And then pension plan usually have a higher investment percentage. So you're earning money. So you are earning money while saving tax. So it's best to do the pension plan from now. When you file that single tax return form, it encompasses income tax, NIS, education tax, and NHT. One form has all of those taxes, and that one form is due by March 15. There's another form which is also due on March 15, which is the declaration of estimated income tax. And this is pretty much a reflection of what you had filed in the SO4 form. It's a reflection to be made on the SO4A. I'm seeing a hand raised. Yes, Marlene?
I could never understand why you're encouraged, and I agree that you should do the pension plan and take that 20% benefit from the allowable limit at this point in time. But I could never understand why at the end of the day, when you are decrepit and going into getting your walking stick, is when you are going to be taxed all of this money, when perhaps you can least afford it at that point.
Yes, that is true. That is true. But I guess the Income Tax Act, it says that once you're in receipt of any income, these income, whether from pension or from a business, trade, or profession, you're required to pay tax on it. Now,
I
the
know
government has not put any things in place. The government has not yet put things in place to change that when it comes on to pension income. However, there are exemptions for pensioners. So when you're at that age, you will not just get the 1.5, you get an additional $160,000 based on your age. So there's a there's an age relief of $80,000, and then there is a pension relief of another $80,000. So the threshold pretty much goes up for you, and you pay less.
Could you repeat that for me? The age relief is how much?
$80,000. 80.
Per what? Per year?
Yes.
Per month?
For the year.
Per year?
For the year, you get an $80,000 and pension.
That's the age relief.
Yes, and then
the pension relief is how much?
80,000. So those two are added.
So it's 2 times 80. 2 times 80 for the year.
Yes. Plus
I believe
but
I believe the rate is also less. The tax rate is also less than what
the tax rate is 25%.
25%
for pensioners?
No, it's not reduced.
For pensioners?
It's not reduced. No, it's not.
Oh my gosh.
No. It's not reduced. However, what can happen is that if you are still employed at let me go back into my thinking. I believe if you're still gainfully employed at the age of 65 years or more, you can apply for a tax exemption relief, whereby persons will not withhold any taxes from your money. Taxes meaning income tax from your money. So you are able to apply for that if you are still employed and you're over the age of 65 years.
All right, so it's the threshold, which is the 1.5096. And then you can take that out of whatever pension you would get for the year, plus the 160 for the age relief and the pension relief.
Yes.
And that's an exemption that you have to apply.
Tax on that 25%, yes.
Yes, and then 25% after that. Oh dear.
I hope that the government will consider putting something else in place for the pensioners, but sometimes too, it is not, I don't know, they will have to put something in place to decide for who gets what, because you have persons who are pensioners and are still gainfully employed and earning more than just the pension income. So there has to be some restriction or something to guide the process as to who gets what. Because you will find that persons, yes, there are pensioners, if they're only in receipt of pension income, then you'll have something for them to say, okay, you will pay a lesser tax. And then persons who are in receipt of pension income plus other gainfully employed income, they have a business, they have doing other work, consultancy work, or anything, then what would happen to those persons? Do they have the same benefit as the person who is in receipt of the pension income alone? The government will have to decide on that. But for now,
Yes.
I guess they have not yet decided on how to really work that out, because that is going to be an issue. Because persons are going to say, why are you are in receipt of pension income plus all other sources of income you're in receipt of. You're getting the same benefit as I am, who is only in receipt of pension income. So
Yeah.
it's a bit of a delicate situation, and I leave that to the government to work it out. Right. Well, for sole traders, they have that to handle with deciding on if it is that they contribute to a pension plan, and I highly recommend it. It allows you to pay less tax, and the truth is, it's an investment for your future. It's just the drawback, as Marlene was sharing. You have to pay tax on that when you decide to take it out of the pension plan. But as I was mentioning though, at March 15 is 2 returns that you will have to file. Some persons are of the view that is only 1 return that is due. It's 2 returns. One is your current year tax return. Current year meaning we are now in 2022, as I mentioned before, and as we all know. But the return is going to do next year, March 15, right? And so that is considered a current year tax return. But there is an estimated tax return that is also due, and that is for the year 2023. You're filing an estimated return for that year. You are saying pretty much that I expect to earn the same amount that I earned in the previous year. However, the law does allow for adjustment, because in 2020, you may just had a great year and you had some big contracts. And so that same amount of contracts and the income flow may not be there in the next year. So you are able to adjust for those before filing your estimated declaration. So there's the SO4 form and the SO4A form. When the SO4A form is filed, you're required to make quarterly payments to the revenue. So that's March, June, September, and December. You are required to make payment, but the return is filed March 15 at the same time when you're filing your SO4 form. So we have that clear. Yes.
One question, Anna-Kay. For persons who may have a business registered as a sole trader, and they are possibly also employed to somewhere else as an employee, they may be paying taxes, PAYE, from that employee income.
Yes.
When they're filing their returns for their business that they are on as a sole trader, do they have to report both all income sources basically, and then also, you know, file the amounts and so on from all their income sources, or do they just report the income from the business?
Okay, so the income tax stipulates that when you are filing your return, you have to report your worldwide income. So if you are employed and you also have a business, you have to report all your sources of income on that one return. That does not mean you're going to be taxed twice. What it means is that you're reporting that you earn all of this money. The tax is calculated on all of that income, and whatever tax was previously deducted from any of those income, it will be deducted from it, and it's the net of that you will pay. So if I paid 5,000 in tax from my employment, and when I prepare my self-employment tax return, and it works out to be that I have $10,000 in tax to pay, I'll minus the 5,000 from that 10, and I'm now paying 5,000 to the government.
Okay.
So what is required though is that if you're employed, you should request from your employer a P24 form. That form outlines your income and the taxes that were deducted from your salary. And once
One
you're
of
in
the things, if I may just add, one of the things, Coral, that you want to be sure to do is to ensure that your employer, if you're paying the total tax, the limit, the taxable limit on, for example, your NIS, that you're not paying it twice.
Right.
And I can speak from personal experience because you have different sources of income, and then you're paying all these taxes, and then at the end of the day, the government does not give you a refund. It'll take them all of the 7 years. That is the limit. And then they'll just tell you, well, you know, you don't get back 1 cent from the government, unfortunately.
No, but it takes a long time. What they prefer is to offset. They prefer to offset it with a future tax liability than to pay the cash out to you.
Assuming you have a liability.
How about offsetting when you overpay? Do they offset it against what comes after? They don't.
Yes, well, you will have to notify them. So if you have overpaid, you are able to offset future tax liability. You will need to submit a letter to them, or you can use the RAISE platform. You submit to them to say, okay, you overpaid on a particular year, and they will provide you with a form to be completed. And once that is submitted to you, they will go ahead and do the relevant work. Sometimes you have to follow them up, but they do make the changes eventually.
And from experience, once you do that, it triggers an audit.
Sometimes, yes.
Yes.
Sometimes
and then you have to send it in and pray very hard.
Pray. Sometimes it does. But Marlene made a valid point earlier in relation to NIS. The act stipulates that you only pay NIS on if you have paid the maximum amount on from one income, you are not required to pay it anymore. You're not required to pay any more NIS. So if in your employment, you have already contributed the maximum amount, it doesn't matter any other income that you have earned, there's no more NIS to be paid. Currently, there is the income cap is 5 million for the year, and the rate is 3%. I'll be showing you later, but seeing that we're on it, the cap income is 5 million. So if you are earning 5 million in employment, then any other income that you would have earned outside of that, there's no NIS to be paid. However, if you're earning less than 5 in employment, once you put all your income together, the cap amount that NIS is calculated on is 5 million. Yeah, and that stands by 3% of that amount. All right. So next, the form, the SO4 form and the SO4A form, it outlines these taxes, which we pretty much touched on, but I'm just going to share the rates. So for NIS, the annual income is capped as 5 million and the tax rate is 6%, for sole traders. For employed persons, they would have been paying 3% and their employer matches that and paid 3%. But as a sole trader, 6%. NHT, the tax rate is 3% for you as a sole trader who is not employed, or the income earned from your business, that is taxed at 3%. You will find though that in the case of being an employee and also treated as a self-employed person, when you group all your income together, when you're calculating the tax, you will have to know which portion to tax at 2%. 2% is for employees, for NHT, and 3% is for self-employed persons. And so those amounts are broken out and taxed separately based on the type of income. Education tax is 2.25% of your statutory income, and your statutory income is your income less any allowable deduction such as your NIS or your pension contribution. Income tax is a tier system. You have a 25% and a 30%. You pay 25% on income that are 6 million or less. And if your income is greater than 6 million, you pay at a tax rate of 30%. And the income tax, as you know, it's not as you know, but income tax is calculated after you have deducted the tax-free threshold of the $1.5 million, $96. Partnership, well, the partnership itself, they do not pay income tax. They do not pay income tax. There's just a return to be filed with the revenue, and that return pretty much outlines the income and expenses of the partnership and the share of profit or loss. But the profit or loss is really taxed on the partners themselves. And when it is taxed on the partners themselves, it takes on the same element of a sole trader at that point. So each partner, the business net profit or loss is shared among the partners, and they use the same form. The partners will use the same form, which is the SO4 and SO4A, to report their income to the revenue. They benefit from the same tax-free threshold of the 1.5 million. And as was mentioned, the partnership itself filed a return. There's no payment to be made when the ITO3 form is filed. It's just a matter of reporting to the revenue that this is the total profit or loss that the partnership makes. The onus is now on the individual partners to file a return based on their share of profit or loss. So once that partnership return is filed, the tax administration is expecting a return from each partners, because those information is included on the ITO3. It outlines the partner's name and it outlines their TRN. And so they are now expecting a return to be filed by each partners. And they have the same tax deadline, March 15, as everyone else. A limited company now, the company is taxed on its own income, on its own profit or loss. When a company is registered, they get their own TRN. And so whatever is filed on their TRN. The directors or shareholders need not to file a return based on the company's profit, or should not, because it means any money that the company make is not the individual's money. It's the company's money. And so it's the company who is now liable to file its own tax return and pay its taxes. They have the same tax deadline, March 15. In recent time, the government stipulates that they're able to get a tax credit of $375,000 if their annual revenue is 5 million or less. There are two tax rates for companies: unregulated companies 25%, and regulated companies 33 1/3. And when we speak of regulated companies, are pretty much those who are financial institutions who are regulated by the Bank of Jamaica, FSC, or the Ministry of Finance and OUR. So in the tourism industry, if you are registered as a company, is 25%. Your income tax would be, and you're able to get this tax credit of 375 if you're a limited entity. The good thing about having a limited company too, which is the same thing for other business structure, the business expense, you can claim all the business expenses. The tax law states that you can only report income and expenses that were wholly incurred in generating the income. So only expenses that are incurred or that were incurred in earning the income should be reported. So you should not include your family's vacation trip in the company. That wasn't incurred in earning the income. But what if it was a business trip? Your family was there. I mean, there are certain, I'm not going to go down that venture, but there are certain things that we can do. And we have tax avoidance and we have tax evasion. And tax avoidance, tax evasion is illegal, right? But we can put things in place to manage the amount of taxes that we pay at the end of the year. And these are legal things that I'm referring to in place to reduce your taxes. I will never encourage anybody to put things in place that would, rob the government from what is due to them. But the law allows for persons to make decisions that will manage the amount of taxes that they pay at the end of the year. And so it's a matter of finding a tax professional who is able to guide you in that process. As a limited company, you as an owner can be employed in your own company, right? And so that is a way in taking funds out of the company. You don't just decide that you want a money and just dip into the company and take out some funds. No, there are structures in which you can withdraw funds from the company, and you can be either an employee or the company declares a dividend and payout. Whichever of the option, you will weigh the tax implication of both options and decide on which one is the best one for you based on what you're trying to achieve. So if owners take money from the company, and it is classified as drawings, as we know, but at the end of the year, if that individual doesn't repay the company, then it is assumed that a payment is made out to this individual, and the company should pay tax on that, and the individual should report that on their tax return as an income from the company. And so we can avoid the back and forth with that by setting up something from the onset. Treat yourself as an employee, give yourself a paid salary, and the relevant payroll taxes will follow. And I'll be showing you that shortly. Do we have any questions before I continue?
I just need some clarity with the regulated tax rate. What are you applying that to?
So the regulated tax rate is the same process of determining, your net profit. And they will get the tax credit of 375 and just times that by the 33 1/3. That's for income tax only. Companies only pay income tax based on the form that is required for them is income tax. So their income tax rate is 33 1/3 versus a regular company who is not regulated by the Bank of Jamaica, FSC, or UR, and so forth. They will pay 25%. So an entity in the tourism industry, they would be 25%. Their income tax, that is 25%. It's just that the regulated entities, they pay a different rate. They pay at a higher rate. That's okay, Marlene, or you want more clarity?
Yeah, I think I'm okay.
Think you're okay now?
Yes.
Okay. All right. So I have some of these I would have shared before, but I put them more easily put together so you're able to see. So for sole traders, you file annual SO4 and SO4A, as I was mentioning before, at March 15. If you have employees, you deduct and pay over PAYE, NIS, NHT, and HART on a monthly basis. And there's an annual return that is due called SO2. So when you have employees, you are now a collecting agent for the government, and you are required to withhold the relevant taxes from your employee's salary. And those are the PAYE, NIS, NHT, and HART is a payment that is made by the company. The employees, they do not pay HART contribution. It's really the company that pays HART contribution. And once those are deducted on a monthly basis, then those are paid over to the authority monthly, which is the 14th of each month. We are in the month of May. So the statutory that were deducted, the taxes that were deducted from the payroll in May, those are due by the 14th of June. Right? At the end of the year, there is an employer's annual return that is called SO2 form, and that return is due by March 31st. So for the year 2022, the employer's annual return will be due March 31st, 2023. Well, you know that I have employees at Sole Trader, right? Sole traders can have employees. Just to clarify that. Sole traders are able to employ persons and withhold the taxes from them and pay it over to the government. As a sole trader though, if your earnings, your sale that is equal or greater than 10 million, then you are now required to register for GCT and charge GCT on your sales and file a monthly return to the government. Now, that requirement, some persons, they don't understand GCT clearly, and some persons, once they think that they have a business, they automatically need to charge GCT. No, that's not the case. You must meet the requirement of earning 10 million for the year. If you just start business, just setting up shop, just putting things into play, but based on your projection and the sales that you are incurring, if it reaches 3 months into the business or 6 months into the business, and you foresee that before the year is out, you will reach the 10 million mark, then you can register for GCT before you reach it, because based on the projection, you are likely to reach the 10 million mark. And so you will register for GCT and you will file and pay your return on a monthly basis. And that is applicable to all business structure. You have to meet the requirement of the 10 million before you can register and charge your customers GCT. The standard GCT rate currently is 15%. If you are in the hotel industry, it's 10%. If you're in hotel specifically, it's 10%.
Meaning the accommodation subsector, or just the tourism sector generally?
Accommodation.
That's 10%?
Yes. There is also, which I did not put here, there's also the room tax that is applicable for persons who are in the accommodation business. I will include that in the supporting documents that will be shared with you, the relevant rates and information in relation to the room tax. For partnership, their return, as I shared before, that is the ICO3, that's the partnership return, and then each partner should file SO4 and the SO4A. The same is applicable to this type of business structure. If they have employee, they will withhold the relevant taxes and file over to the government entity. For companies, the same thing applies. They file their annual return with Tax Administration Jamaica. If they have employees, they also file the employee, they make the payment on a monthly basis and file their annual return. They will also register for GCT if they meet that requirement. Each director should file their SO4 and SO4A if they are in receipt of income from the company that was not previously taxed. So remember, I was referring to the fact that if you take funds from the business as drawings and it was not repaid to the company, that income is treated as funds in receipt from the company and is subject to the relevant taxes. And you will not be required to file your return to report that income that you have received from the company. If that is not the case and you are an employee in the company already, then there's no need to file an SO4 form as a director. You have other requirements such as the annual return with the Companies Office of Jamaica, and this is usually due on your anniversary of registration. So if you were incorporated with the Companies Office of Jamaica in September, then by the following year, September, you are required to file an annual return. So there's no set date for this return. It's just based on your anniversary date of incorporation. That return is due with the Companies Office of Jamaica. Based on other tax obligations that would be likely due for you, which is the room tax, which I will be sharing more information with you in the supporting document. That return is also due on a monthly basis with the revenue. If you are a charitable organization, then they really don't file tax return, but they have a return to be filed with the Department of Cooperative and Fairness Societies of Jamaica by March 31st. No, I know tax is a delicate situation, so does anybody have any questions in relation to the taxes or any current situation that you think you need clarity on as it relates to filing your tax returns? So everybody knows everything, man. That's wonderful. That's wonderful. I usually find that for small businesses, they do not claim the expenses that they are able to claim. Now, for most of these entities, having read the review, you're operating from an establishment, right? So if it's not owned by you, then you maybe would pay rent. So you know that those income can be claimed. Any expense you incurred in maintaining that property, you are able to offset that with your income, which would by effect reduce your taxes that you pay at the end of the year. You are able to offset your staff salary payment. You are able to have, if you entertain your clients, you have a client or a customer that you carry out for lunch, have a business meeting and those lights, you are able to claim those expenses as a business expense. You are able to claim accommodation expenses if you travel for the business. You are able to claim that. What the government says that you cannot claim is that if you, especially as a sole trader, you have to eat, right? So if you buy lunch, it's not treated as a business expense because without you having the business, you have to eat. If you buy clothes to wear, it's not a business expense unless it's a uniform, a branded uniform, then you're able to claim that expense because that is not treated as a marketing expense. You're marketing the business by wearing a branded attire. And so that you're able to claim, but to purchase a regular clothing item and treat that as a business expense, that's not allowed. for tax purposes. And which other, I'm not thinking of any other expenses now, but if you have any, you can always shoot it and I can provide clarity on that. Yes, so any questions?
Thank you, Anna Kay. Is anybody experiencing any particular challenges that relate to what we've heard today? I know it's a lot of information to take in, so do let us know afterwards as well if the questions do come to mind, and we can help afterwards. But anything particular that you've sort of encountered in your businesses that you'd like to raise?
Rebecca, just perhaps a quick one for anyone. I just interrupted. I'm so sorry. Yes, I just wanted to ask a quick question regarding the drawings, where you have other directors that they are not part of the operational details of the company, but they are directors and they would be expecting some kind of drawing at the end of the year. Do they have to treat with that drawing as part of their own filing, where you do your SO4 and your SO4A, or how would you treat that, not just from the company's perspective, but from the director's perspective?
From the director's perspective, okay. So if they get a payment from their company, I wouldn't treat it as a drawing. So you have a director's fee. The company can decide to pay director's fees. And so by law, the payee, the company who's making that payment, is required to withhold income tax from that payment and provide the directors with a statement outlining the income that they would have received and the taxes that were deducted. Then that director will use that document to file their individual tax return.
Okay.
And so they will use the same SO4 form. So you can use the company can make the payment as a director's fee or as a dividend payout to the directors, depending on how they choose. So as a dividend, it
What's the advantage of putting it in as a director's fee as opposed to
the dividend? Okay, so for the director's fee, that is treated as an expense to the company, and the company would also withhold 25% from the payment to the individual. If it is treated as a dividend payout, then the dividend rate, the current dividend rate, is 15%, and it's not treated as an expense, but it's really a reduction in retained earnings. So that would have been previous earnings that the companies made. The dividends are paid out of that. So dividends are not paid out of current year earnings. It's paid out of previous year earnings based on the return earnings that are stated on your balance sheet, which outlines the company's assets and liabilities and equities. The dividend is paid out from your previous net profits, or the accumulation of your net profits is paid out from that.
I'll listen to
So
this
the
one
net
again.
profit is 15% is dividend. If it is a director's fee, the company is able to get that as a tax deduction, and they are also required to make a withholding of 25%. If it's a dividend, 15% is not treated as a tax deduction, but it reduces your retained earnings, and you're required to withhold 15% from the payment and file a return over at the end of the month to the revenue.
I'll go back and listen again to make sure that I've got it.
That's the beauty of a recording, isn't it? Thank you, Marlene. Thank you for the question. I'm conscious we've just got about 5 minutes left, I think. So are there any more questions at this point? Do feel free to put things in the chat or call out.
Remember, you can ask me any of your tax related questions, because I know as small businesses you may have questions in relation to tax matters.
There's an I missing.
Yes, thank you. I will correct that. Thank you so much.
Great. I think if there's no more questions, we've done lovely. Thank you. Thank you, Anna Kay. I know that's lots of information, and I know that there will be some follow-up documents, as you mentioned, for people to be able to work through these things as they need to as well. I think it's one of those things, isn't it, as you need to think these things through, and then when you are needing to do your tax returns and keeping records and that kind of thing, it'll be great to have something to refer back to. So that's been really, really helpful. Lots of information there to go back to, and we will share the recording afterwards as well. So as Marlene says, if there are things that you want to go back and check, that's great. I'll hand over to you, Anna Kay, to just conclude. That's great. Thank you.
Okay, thank you, Rebecca. I'm seeing a message in the chat. Let me just check to see if it's a question. Good job. Oh, thank you, Marlene. Thank you so much. All right, so I am available if you need to reach out to answer specific questions to your business, because I find that there may be, especially with smaller entities that are operating, they may not have somebody who is committed to look over their systems for them and their accounting records and so forth. So we're able to help. The tomorrow session will provide more in-depth knowledge on accounting and how to really put things in place to ensure that you have adequate information at hand to make decisions. I had a conversation with a small business in recent times, small business owner, and she was expressing to me that she's making money. And I'm saying, okay, well, that's good. So I'm saying, are you keeping a record? We have an accounting system. She said, no. So I said, how do you know that you're making money? Because she's getting sales. I'm saying, no, that does not dictate that you are making money. Yes, you are getting sales, but remember you're incurring expenses, and you have to understand if your expenses are greater than your income, then you're pretty much making a loss. You're operating at a loss. And so she was not aware of the fact that you have to have systems in place to assess your business, and in knowing that you're making a profit or loss. And yes, she was a sole trader, so she believed that every money that comes into the business goes into her pocket. Technically, it's your money, but you're operating a business, so there must be funds that should flow back into the business to effectively run the business, so that at the end of the day, you can decide to take a set amount and not all of the money, because you have to continue to buy your supplies to sell. So I trust that as the Travel Foundation and We Care continue with these trainings, it will provide more guidance and will enlighten you as business owners to effectively manage your business. I'm happy to be a part of this movement, and I trust that you would have gained something today to propel your business forward. Thank you.
Thank you, Anna Kay. And as Anna Kay mentioned, we'll be back tomorrow for the next session on bookkeeping skills at the same time, 10 o'clock in the morning, on the same link as well, just to make it easy. And we'll use the same link for all of these trainings as we go through the other business training later in the month as well. So yeah, same link tomorrow, same time. And thank you all very much for joining.
Thank you.
Yes,
Thank you.